Since I've already produced series on the Chandy Momentum Oscillator and the Choppiness Index Indicator, I won't be covering them in great detail here. The main feature of interest here is the convergence of these two indicators towards each other for a relatively short time, followed by their divergence back away from each other. For an uptrend like in this example, falling values for the Chandy Momentum Oscillator and rising values for the Choppiness Index help identify when price could begin to slow down towards consolidation and even a possible bearish reversal. Also important is just a basic trend line, to which we can also add a Fibonacci retracement, especially after price has closed in under it. A Fibonacci fan could work here in terms of finding trend lines at lower ranges following the further drop. However, if the consolidation range begins to flatten, Fibonacci arcs might work better, as price continues in a neutral to bearish range after retracing just two Fibonacci retracement levels. Fibonacci arcs provide good detail on these prolonged consolidation ranges. Whenever price falls onto those intersections between the Fibonacci retracement levels with the Fibonacci arcs, upswings are much more likely. And as this is sustained for longer, market sentiment goes from bearish to neutral to neutral to neutral to bullish. And of course, now that there's this large green spike going over the previous highs, attention will focus on consolidating over 28 and up into the 30s. This consolidation range is much shorter and narrower compared to the less common scenario of what we just looked at with the Fibonacci arcs and retracement. Now going back to the breakout point and focusing on the indicators, we can see the convergence and divergence we discussed earlier, demonstrating how even an initially strong break can quickly fall into consolidation prior to the possibility of a trend continuation, reminding us why it's important to also pay attention to short-term developments while also marking a key price range based on important opening and closing prices along with other structures on the chart, such as previous highs and gap levels. Then the criteria is quite simple. Price must remain firmly over this range that defines a lower boundary for the consolidation area in order to improve the chances of a bullish continuation forming.